Okay, and we are now live. So, hello and welcome to those of you joining us just a few minutes early. My name is Charlotte. I'll be your money show host for this session. I do have Ben here with me in the Zoom room, ready to begin his presentation on time at 1 p.m. Eastern Time, coming up in just a few short minutes. Thank you all so much for your patience, and I hope you're enjoying the show so far. Hello again to anyone just joining us. This is your Money Show host speaking. We will be getting started in just a few minutes here at 1 p.m. Eastern Time with Ben Rain's presentation, Investing in the Industries Fueling the AI Boom. Thank you for your patience, and I hope you're enjoying the show so far. Hello again and welcome. This is your Money Show host popping in once more to let you know that the session will begin in just a couple of minutes now at 1 p.m. Eastern Time. Thank you. Hello, everyone, and welcome to the session. Please join me in welcoming our next speaker, Ben Rains, stock strategist with Zacks. He also runs the Alternative Energy Innovators Service, and he has a great presentation in store for us today. So, to our live viewers, please share any questions you may have throughout the session in the live chat box, time permitting. We'll see if we can get to any of those at the end of the session. And with that all said, Ben, I will hand the mic over to you. I'll be right here if you need me, but the floor is all yours.
Hello, everybody, and thank you, Charlotte, for introducing me and having me here today. As she mentioned, I'm Ben Rains, a stock strategist at Zacks Investment Research, and today we're exploring one of the biggest megatrends and super cycles in the U.S. economy and Wall Street, and also one that's really near and dear to my heart, and that's the AI-fueled energy boom. Today, we're diving into the soaring energy demand, why it's happening, looking at energy and infrastructure space as a whole, and then exploring some industries, stocks, and ETFs to capitalize on this once-in-a-generation energy sector megatrend driven by the power-hungry AI boom. Wall Street's already cashing in on the newly minted relationship between AI growth and skyrocketing energy demand, and the big money's diving into best-in-class stocks and upstarts across nuclear energy, natural gas, solar, battery storage, grid infrastructure, and beyond. The US and the world are just beginning really an energy revolution that will span decades and cost trillions of dollars. This backdrop paves the way for investors to cash in on the companies that will power the AI economy. AI grabbed a bulk of the investing headlines over the last few years, yet Wall Street knows we won't reach that abundant AI-driven future that investors are betting on without massive energy industry expansion. Energy efficiencies across every aspect of the economy and other trends, which are starting to reverse, allowed for that impressive economic growth without more power. But that's all about to change because AI marks a paradigm shift for energy demand. Generative AI like ChatGPT use 10 times the energy of an average Google search, and large data centers can consume as much electricity as a mid-sized city. This backdrop is why electricity demand is set to grow by roughly 25% by as soon as 2030 and 75% or more by 2050. And this is off just 2023 levels. This is all driven by AI data center expansion, transportation electrification, reshoring, and beyond. This will be no easy task. In fact, the size and scope and the timeline of the upcoming energy industry expansion is why investors should be so excited about the huge long-term upside potential. On top of that, big tech, big government, and Wall Street are critically taking an all of the above approach to energy and grid expansion across nuclear, natural gas, solar, battery storage, and more. Reliable, affordable energy is really the foundation of innovative growth economies. It's something many of us here in the US kind of take for granted. US electricity demand remained roughly flat around 4,200 terawatt hours between around 2008 and 2023. That demand remained nearly flat despite huge GDP growth and a massive bull run for Wall Street. Energy efficiency, as I mentioned, and broader shifts, including moving away from manufacturing, so offshoring energy-heavy industries while transitioning towards a less energy-intensive services side of the economy, such as tech and finance, allowed for that all to happen with that growth and not having more energy demand. This is all changing now because tech requires more energy than ever, and the US is attempting on top of that to reshore critical areas of the economy, from chip manufacturing to rare earth mining and refining. As we mentioned, electricity demand is set to grow by 25% as soon as 2030, and 75% by 2050 from 2023 levels. I want to linger on this chart a bit longer, and I want to dive in a bit more of the background of the bull case for energy growth. So PJM, excuse me, Interconnection manages one of the largest power grids in the world, spanning 13 states and DC, and some of the most data-heavy center areas of the country. Their auction prices soared 800%, over 800% last year for the 2026 period, and then they climbed again this past summer off those levels. Across the country, 9 of 13 major power markets are already reaching critical tightness levels. 12 of 13 are set to hit critical levels by 2030. So this means more blackouts, higher prices, and soon enough, soaring electricity demand and skyrocketing prices will be on the front page of every newspaper all across nightly news because average Americans will be getting crushed, and those students start to wonder why they're left to suffer so big tech can build out the AI age. This is why I'm so bullish on the energy sector, because the US is the most dynamic economy in the world, and it will unleash an energy boom given what's at stake. Because big government, big tech, and Wall Street are throwing their money behind the rapid energy industry growth because they must. Amazon, Microsoft, Alphabet, and Meta are pouring billions into data centers. AI hyperscalers are projected to spend roughly 400 billion on capex this year. These are unprecedented levels. This group of just 4 tech companies, capex is up 300% off of 2018 levels. Globally, companies are set to spend 7 trillion in capex for data center infrastructure expansion by just 2030. 1.3 trillion of that spending is for energizers, so power generation, electrical and mechanical equipment, network infrastructure, and 40% is happening in the US, and that's just in the next 5 years, remember. So on top of that, the US energy sector faces a nearly $600 billion investment gap by just 2033. And this is why US and big tech are all taking an all of the above approach for energy growth. Investors aiming in to cash in on solar and nuclear and other forms of energy outside of coal and some of the fossil fuels, but we'll talk about natural gas as well, aren't really betting on a futuristic world that's decades away, because solar already accounted for 75% of capacity growth last year, with wind at 17% and natural gas at 5%, with nuclear at just 2%, which is nearly all from uprates. But we'll get into more of why that's still a bull case for nuclear. And if we look at the other chart here, we can see that solar is set to account for over 50% of planned utility scale capacity additions just this year alone, so in 2025, with battery storage taking up about 30% and natural gas taking up about 7%. So this makes sense in the near term, given the time it takes to build out these various energy projects. Grid solar typically takes about 2 to 4 years on average throughout the whole process. Natural gas takes about 2 to 3 years, though it can extend to about 5 years to build one from scratch. And meanwhile, large nuclear reactors have planned construction times of anywhere from 5 to 7 years, but they often double in time due to red tape and more. And that's sort of the backdrop just for the near-term expansion, as we'll get into nuclear in a bit. Wall Street's already cashing in on a few of these stocks that stand to become the next titans of energy in the stock market, on top of picking actual AI winners, which could be much harder. So we know the companies that are going to be able to expand the energy infrastructure and the power base in the US. And it's going to be hard to pick actual AI winners. And some applications we don't even know what it's going to look like in, say, 5-10 years from now. But with that said, Vistra is a leading integrated retail electricity and power generation firm focused on natural gas, nuclear, solar, and battery storage. It was actually the top performing S&P 500 stock in 2024, up about 260%. That outpaced NVIDIA, which is up about 171% last year. And as we mentioned, Wall Street's all in. So 2 of the top 3 last year were nuclear and natural gas heavy stocks, and 3 of the top 10 were in that area as well. And GE Vernova surged again in the first half of 2025, lagging behind only Palantir. Now we're going to dive a bit more into nuclear energy. It has provided 50% of America's carbon-free electricity for several decades and operating at full capacity 92% of the time, making it the most reliable source by far, way above solar, which is all the way down at 23, since the sun isn't always running. But after decades of neglect, the critical players in the space, from government to tech to finance, are now helping jumpstart that new nuclear age. Microsoft, Amazon, and Meta, Alphabet, Google, whatever you want to call it, are signing deals with nuclear energy companies to power their energy-intensive AI growth, along with trying to decarbonize. That's a big push for those tech companies as well. In the collective trillion-dollar balance sheets of those AI hyperscalers are helping underwrite the huge R&D costs of next-gen nuclear, helping keep old plants running as well. And nuclear stocks now represent a direct investment in artificial intelligence, long-term in the expansion of energy infrastructure, and really long-term economic growth. The US government's all in as well. The US government passed a bipartisan Advance Act back in 2024, aiming to accelerate nuclear energy's resurgence in America by speeding up licensing, cutting red tape, and more. And then in May of 2025, President Trump signed an executive order helping to try to reach an overarching goal of quadrupling capacity in the US by just 2050. So just in the next 25 years. So these are some of the bigger winners that I seem like more surefire long-term winners in the space. Now we're going to get into more of the nitty-gritty of some stocks to pay close attention to, especially in the nuclear space. So we mentioned GE Vernova was a big performer in the first half of 2025 and in 2024. It's a pure play energy transition company. It's a GE spinoff that provides exposure to nuclear, electrification, natural gas. Its stock has soared since its IPO, and crucially, its Hitachi, GEV, and Hitachi Nuclear Energy Division looks to be a big winner in the next-gen small modular reactor space. On top of that, you have Rolls-Royce. This is their over-the-counter ticker here in the US. They trade overseas in London, but it's a really liquid stock. The historic engine manufacturer is leveraging its nuclear propulsion expertise to get into SMRs, and it's sure to be a big winner. And it's under new management. So former oil executive took over in 2023, aiming to quadruple its profits in 5 years. It's already ahead of schedule there, and it reinstated its dividend and announced some buybacks. And then we have Constellation. It's the largest U.S. nuclear power plant operator. It cemented the link directly between AI and nuclear energy when it landed a big 20-year power purchase agreement with Microsoft in 2024. And then it followed it up with a 20-year power purchase agreement with Meta as well. On top of that, it plans to expand into natural gas very heavily with a $27 billion deal to buy natural gas and geothermal powerhouse Calpine. That deal is expected to close in the fourth quarter of 2025. And on top of that, we're going to look at Cameco, which trades under the ticker CCJ. It's the second largest uranium producer in the world, and one of the only large-scale uranium stocks that most regular U.S. retail investors can buy. Its importance to the U.S. and Western countries is rapidly expanding as the U.S. attempts to cut itself off from Russia in the region, which dominates the market. And on top of that, Cameco has a 49% ownership. Has a 49% ownership in Westinghouse Electric, which is one of the largest nuclear equipment and services business in the world. They're actually planning to build 10 reactors here in the US in the relatively near future. And then on top of that, for investors who don't want to pick any winners in these spaces, especially nuclear, there's a few ETFs in the space to consider looking at. So we have some here on the screen to take a look at, because they have these sort of broader, more surefire names mixed in with some of the speculative stocks that we're about to touch on here in a second. So we can see the new age nuclear energy segment is gaining some of the most steam, and that is downsizing and mass producing nuclear power plants. And these are next gen nuclear power plants called small modular reactors. So you know, SMR, a lot maybe in the news or on headlines. And the goal is to create high-tech, smaller, less costly reactors that can be built more quickly and operate in far more locations. There's over 100 commercial SMR designs being developed worldwide, and a few are going to be clear winners and make their way through the gauntlets ahead. And the idea of the future is these SMRs to be developed in far more places at far less cost, including directly on sites at AI data centers, industrial buildings, military bases, even the moon. We already saw NASA talking about that, building these SMRs on the moon. AI data centers ideally want their own direct behind the meter sources so they don't strain the grid. So that's really the big bet long term, is that SMRs are going to be everywhere, and they're going to be kind of the future of a vibrant economy where no one worries about energy, especially as AI kind of drains the grid here in the near term without a rapid rise in energy production. Now we're going to go here, quickly, sorry, before we jump ahead, there's the stocks worth mentioning. So we already touched on GEV. That's a bigger winner long-term in the space. It's been in the business for a long time, the nuclear business. NuScale, SMR is the ticker. It's more of these are speculative names along with Oklo. I've heard it pronounced various different ways. So those are more of the speculative side, Oklo and SMR. And then we already touched on Rolls-Royce, and then Westinghouse is another player in the SMR space. And it's owned by, as we said, Cameco, the uranium producer, and then Brookfield Renewable Energy Partners. That's that BEP ticker. And then some potential IPOs to look for. Holtec International is set to go public later this year. And then we have a few private companies here as well that have some potentially big deals. So you could see those and maybe go public in the next few years. So just put these kind of long-term home run players in stocks on everyone's radar here. It's certainly worth noting. And if anybody's been paying attention to the space already, some of these names have gone pretty hyperbolic recently. GEV, SMR, Oklo, Rolls-Royce have all gone on big runs, as well as CCJ. And now we're going to dive into a bit more of just uranium stocks, which is part of the broader nuclear energy bull case. As we said, the US is trying to quadruple the space, even though it's led it for years. Decades of stagnation have kind of led to a little bit of a downturn for the industry, but now there's huge upside because, as we said, that demand is going to come and nuclear is going to play a big role. So it's also worth noting that why Cameco is such a big player, in these three stocks we're going to quickly mention are US based, because Kazakhstan and Russia and that area of the world produce a huge amount of the world's uranium at the moment. Kazakhstan alone produces about 45%. For comparison, OPEC member countries produce about 40% of the world's crude. So it's a huge player in the space. That's why Cameco is so big, located there in Canada. And then how, if any US companies that are able to gain real momentum in the space could be huge long-term winners. So it's worth looking at some of those speculative names in this space. Some of those are Centrus Energy, which trades in the ticker LEU. And then we have Energy Fuels, which trades in the ticker UUUU. And then we have Uranium Energy as well, which is UEC. It's worth noting I'm going faster through this presentation than we expected, so that's a good thing. We'll have some opportunity to have some questions here at the end, or I can actually go to some of the slides I got rid of because I didn't know exactly how long this was going to take. I think I'm speaking a little faster than I expected. So now we're going to go into the solar space. So this has been an area that's been really hard hit. It might be turning off some investors if you're reading headlines, you're seeing some of these stocks plummet, but there's a lot going on, and it could be a good chance to maybe buy some potential big winners at really beaten down levels, but we'll kind of dive into all of that here. So higher interest rates and difficulty competing against periods of outsized growth in that kind of post-COVID big boom and other headwinds have crushed solar energy stocks for the last several years. Some of those other setbacks include a flood of Chinese-made solar panels in the US market and the possibility of favorable tax credits and incentives slowly disappearing. Thankfully, solar energy's tumble provides, as we mentioned, kind of optimistic investors opportunities to scoop up proven stocks with long-term growth potential at beaten down levels. The solar industry stands to bounce back as tech companies and the economy transition away from fossil fuels. Amid the AI boom, we already know that solar is set to account for over 50% of planned utility scale electric generating capacity additions in just 2025 alone. There will be a few winners in the space for sure, and the slow phase out of some of the subsidies could actually encourage more cost saving measures and simplifying renewable energy investments, potentially attracting a broader range of big institutional investors who are kind of helping start some of these businesses. The companies that obviously survive the near-term changes in the industry, and excuse me if you hear this loud noise, they're doing construction on my street here. They're changing out some water lines. Talks to the broader infrastructure spending boom that's going to take place because the infrastructure in the US is very outdated. So the companies that are able to kind of get through all of this will be even better placed to succeed in the long run. And it's worth noting that despite fears about reduced support for solar under the One Big Beautiful Bill, First Solar, which is a big US player in the space, confirmed its bullish outlook when it reported its results at the end of July, noting that the bill maintained most of the critical, what they're calling a Section 45X tax credits for domestic solar. Nuclear, obviously, as we mentioned, will play a big role and a massive role long term, but the next gen nuclear plants aren't even set to begin construction until the end of this decade at the earliest. In the US, and these AI hyperscalers don't have that long to wait. So that provides a ton of runway for utility scale solar in the near term. For example, Vistra is a company you've already mentioned. It already said it's advancing construction on 2 new solar facilities directly with the support of Amazon and Microsoft. And an industry standout to watch is First Solar. It's the largest US solar panel manufacturer. It's also very innovative in this space, and it's set to grow for years as the country focuses on domestic production of critical aspects of the economy, such as energy, with also trying to compete directly against China and preventing those Chinese solar panel manufacturers from flooding the US market. First Solar is already benefiting from the wave of tariffs and restrictions on foreign-made solar panels. The Arizona-based firm is benefiting also from what it calls a positive overall emerging industrial and trade policy environment amid the new administration, where utility scale solar will be well positioned to meet growing US energy demand. And it's worth noting that First Solar is building more domestic manufacturing plants to help improve its mix of domestic and international production, but it doesn't build any of its solar panels in China, which is really key for all these solar panels because that's a big trade war threat to a lot of these solar companies that are working directly with China. And now we're going to go to battery storage, which is really crucial, especially as we just mentioned, the US energy landscape is growing, and especially in the near term, based so much on solar energy, because this addresses one of the biggest drawbacks of solar and wind, which is the intermittency. The sun isn't always out and the wind is not always blowing. So that's the wind sector, which we're not touching on today. It's facing some near-term headwinds, and we don't have enough time to kind of dive into that area at the moment. So it bolsters grid reliability amid growing concerns that if we have too much solar in the grid, you're going to have more rolling blackouts and things like that. So generators added about 10.5 gigawatts of new battery storage capacity in 2024. It was the second largest generating capacity additions after solar. US is set to add about 20 gigawatts of utility scale solar, or excuse me, utility battery storage in just 2025, reaching nearly 50 gigawatts. That's essentially up from zero before 2020. So all these industries are growing so quickly that there's a lot of growth already baked in, but huge upside as we go through this, as I said, this longer term energy transition and this energy boom because of AI taking up so much energy and just needing around the clock energy. So some of the stocks to watch in the space are actually Tesla, and Enphase Energy, but those are more on the residential side. But if you're looking sort of at the broader utility side, utility scale battery storage, Fluence Energy is certainly, or Fluence is certainly one to take a look at. Trades and ticker FLNC. And now we're going to take a look at a broader kind of US grid expansion opportunities and some of the key players in the space. And if you don't want to get into the nitty gritty of picking winners in, say, solar or nuclear, or you want to add to your exposure, I think that the grid expansion area is one of the better, more surefire ways to benefit from all of this. So large power transformers, which handle about 90% of US electricity flow, are averaging 40 years old or older. 7% of transmission lines are 75 years or older. Transmission capacity needs to double to keep up with the growth. It's also worth stressing that solar and wind at the moment are replacing retired coal generation, not meeting that soaring demand. So this highlights kind of the dire need for spending and for cutting some of the red tape. There's roughly 11,000 energy projects that are currently sitting in interconnection queues. The average queue durations climb from about 3 years to 5 years. There's some estimates that say 2.5 trillion will need to be spent on US upgrades and expansion to the grid and transmission capacity will have to more than double by 2050, just to support all the energy growth that's going to happen here in the US to support this massive AI boom. And some of the stocks worth looking at are Quanta Services. So that's PWR. It provides wide-ranging infrastructure solutions for utility, renewable energy, communications pipelines, and energy industries as well. Then we have Hubbell, which is a leading utility and electric solutions manufacturer with a really established track record. And then we have Eaton. It is a diversified power management company and a leader in electrical components and systems. We have Mastech. MTZ is the ticker. It's a leading national infrastructure construction company helping build, install, maintain, and upgrade huge infrastructure projects in energy, across utility and energy, excuse me. And then we have MYR Group. So MYRG is the ticker. It's a US-based specialty contractor that builds, maintains electrical infrastructure such as power lines and substations for utilities and renewable energy projects. So the grid expansion is another really important area, along with nuclear, SMRs, solar, electrification more broadly. But the grid has to expand and get hardened, so more resilient no matter what happens. And as we said, it's going to be necessarily harder to pick some of these winners, but these grid companies stand to be big beneficiaries kind of no matter what happens. And I kind of blew through this because I last minute sort of deleted some slides because I thought it was going to take way too long. So we certainly have some time to maybe go over some slides I might have gotten rid of, or if I don't know exactly how this session is going to work. So I'll kind of leave it up to Charlotte to figure out what's going on here. But yeah, we got about 5 minutes left. So if you have any questions or
Absolutely.
anything like that.
Well, thank you, Ben. It looks like we don't have any questions just yet. The audience may come up with some in these next few minutes. So why don't you go through a couple of those slides that you thought you wouldn't have time for? And
Okay.
if anything comes in, I'll let you know. We can we'll cover that.
Okay, and if anybody ever wants to reach out for me, I have my email listed here as well, and you could check out my trading service as Charlotte mentioned at the front, Alternative Energy Innovators at Zacks. And then if any listeners as well want to dive deeper into a few of the stocks I talked directly about, I have a report I wrote that's free to anyone who's at the Money Show today. So go to zacks.com/money show to get a free report diving deeper into 5 of the energy stocks that I talked about here today that are going to power that AI boom that we mentioned. So we'll see what kind of the appendix is. As I said, over the last week, I cut a bunch of this slides. So these are kind of just the broader trends that we're talking about. I kind of try to condense a bunch of this stuff so we can go through. I'll see what looks to be the most. This is back to that PJM price auction soaring. So this is going to be it's kind of floating in the background, these soaring energy prices, and people are sort of talking about it. But I really do think it is the most dire thing that's happening in the US that will be on the front pages of news and nightly news maybe by the end of this year, and it will really show that the US has to really pick up the pace. And a lot of these companies that we talked about are going to benefit in a really big way, because as we alluded to over and over again, the AI age is not going to happen without a lot more power, and everyone has a ton at stake to make sure that happens. So it's a really good space to be into. This is a little bit more of a report that the American Society of Civil Engineers does every 5 years, and the energy space got a D plus, I believe. Yeah, D plus. And it was one of only 2 spaces that actually saw their grade go down. It just shows how outdated and in dire need of expansion the whole energy sector is in the United States, which is crazy to think for the richest economy in the world. But as we mentioned, offshoring critical manufacturing over the last few years or the last few decades, and then transitioning more to a tech and finance-based economy has allowed for massive bull runs in the stock market, massive GDP growth, massive wealth creation without more energy, and AI is about to change that all. So these were all just charts kind of diving into more of that. And then we'll kind of look, these pictures are showing just the complex energy infrastructure grid here in the United States, and how many projects are, also because the US has really struggled with getting these projects onto the grid. So we mentioned that there's 11,000 energy projects sitting in interconnection queues. The duration's climbing longer. So kind of the complexity and the huge scope of all of this is why I think people have so much long-term upside. And we're not talking 2 years from now, we're talking 20, 25, 30, 40 years from now. If everyone who in the tech world and all of Wall Street's betting on this AI age happening, it won't happen without a ton more energy. And I'll use that phrase again. It really does just mark a paradigm shift for energy demand here in the United States. And then these were just some broader areas to invest in, which we already touched on. This was getting into a little bit of the reason why, despite how powerful and important nuclear energy is, we have had total stagnation for several decades here in the United States, which is kind of shocking because it has provided about 20% of electricity generation for decades without actually adding more power. So it just shows its reliability, and that's all about to change. And we can see, though, here in the US, this is the next chart we'll show real fast, is that the US is by far the largest producer of nuclear power, but this chart below it, the horizontal lines are showing that China actually has the most reactors under construction. So despite some of these stocks already going kind of hyperbolic in the industry, we are not really breaking ground yet. So there's still a chance to really get in on the ground floor of a lot of these stocks.
Hey Ben, I'm sorry. I've been trying not to interrupt you here, but we
Yeah,
did get a
yeah.
lot of questions since you started going through those slides.
Okay.
So I have they all just came through at once, I swear.
Okay.
Let's see. I just have, oh, Johnny had said he works in the power industry. Most UPSs now use lead acid batteries, I think, but we're seeing some shift towards Li-on, Li-on. Where do you think battery technology is going, and who are some of the names that you would look at?
So that is here we can go back to my battery slide. Uh it's a name that I am not as in the weeds on. If you're in the industry, you would likely know a little bit more than me on where like the future could be, in the sense of if you're at the cutting edge of this technology. But the battery storage industry, as we alluded to in general, so whoever is going to be grabbing the most market share, whatever the technology might be, are going to be these huge winners. Because if solar and obviously projections can always change. If solar and wind, but especially solar, are to grab so much more or grow so much more in the coming decades, the battery storage is going to have to be a massive, massive part of that. So I think really ETFs in the space are worth looking at, but the actual technology itself, in terms of who the real innovators at the cutting edge are, I don't want to speak out of turn and turn you in the wrong direction anyway on that. Just talk more generally about the space.
Thanks, Ben. And then because you had touched on nuclear, I'm going to ask this one from Gerard. Are there any nuclear stocks that will benefit in the near future with the AI boom?
I think we can go back to some of these slides here. I think these four that are highlighted here on this slide deck, GEV, Rolls-Royce, and as I said, this is an over-counted ticker, but it's a really liquid stock. It trades in London. Constellation, Cameco, then there's Talon Energy. There's some other players in the space. These are the more, on this page, are more kind of surefire winners. They have massive businesses that are already in operation, where this page, these are the SMRs, those small modular reactors. So this is the future that everyone's betting on, but these companies aren't breaking ground on any projects yet. So that's kind of why there's so much hype for a lot of these stocks. So we could talk in, as we mentioned, GEVs there as well. So maybe getting into the established players where SMRs are kind of a bet for the future, but they have bigger businesses to support that. So GEV, Rolls-Royce, and then as I said, Westinghouse, which is owned by Cameco and Brookfield Renewable Energy Partners. And then the more speculative names in the space are Oklo, NuScale, there's Nano Nuclear, there's some Holtec International set to go public at the end of 2025. So those are those more speculative kind of home run names that have gone nuts here in 2025. And then some of the uranium energy or uranium stocks we mentioned here that are worth taking a look at it for part of the broader boom. And as I said, these are long-term bets. So they've already gone nuts. And even if there's a pullback, which there certainly could be, if you're a longer-term investor, I think this space is one of the better areas to be in the entire Wall Street spectrum at the moment.
Well, Ben, thank you so much for joining us today. Fantastic presentation. I know we had a couple people in the audience saying the same. It's been a pleasure having you on.
Well, thank you very much, Riley. I really appreciate it. And thank you, everybody, for listening today.
Yes, another thank you from us at Money Show for tuning in. And be sure to stay tuned as we have some more in store for you today in this Money Show Virtual Expo. I hope everyone has a wonderful rest of your day. Take care.